Ladies and gentlemen, welcome back to the channel in the day of AI, in which that's where we are in. Whether you like it or not, AI is a main theme of this market for the next decade or longer. There are 3 stocks right now that are in this theme that I believe could make you rich. Now, I'm not a financial advisor. I'm not a financial planner. I do have positions, substantial positions in all of these companies. I will share with you what these 3 stocks are, why I like them, what their valuation is, what the major catalysts are to come. And honestly, I'm not going to gatekeep these 3 stocks from you. If you just want to know the stocks, number 1, Resolve AI. Number 2, Inflection. Number 3, Poet Technologies. Those are the 3 stocks. And if you're interested in learning about these companies, stick around in today's episode. The only thing that I ask you do is hit that like button, subscribe to the channel, and check out the link down below in the description of this video to come join the trading community. These are 3 stocks of many others that we have uncovered, that we have active positions in, and are executing on. Link down below if you want to come join us, but let's get started. Now, I'm going to save Resolve AI for the last stock that we're going to cover in today's episode. I think this is the most undervalued AI stock on the marketplace today. We cover Resolve AI quite regularly on this channel. So I want to save that one for the last. And that is the stock that I have the largest position in as well, by the way. Let's start off this video with Poet Technologies. This is one that I've recently come across that's a bit of a wild card that could have explosive growth next year and upcoming catalyst, trading at less than $1 billion market cap. Poet Technologies is a Canadian-based design and development company specializing in photonic integrated circuits, PICs, light sources, and optical modules tailored for high-speed data transmission in AI, data centers, telecommunications, 5G interconnects, and edge computing markets. But the upside here is data centers. That's what sends this company substantially higher. Now, the company's core innovation is the Poet Optical Imposer, a platform that integrates electronic and photonic components onto a single chip, enabling simplified, scalable optical engines for AI networks and cloud infrastructure. Again, data centers. Founded in 1972 and headquartered in Toronto, Poet focuses on mass manufacturing capabilities with recent expansions including partnerships for assembly in Malaysia. As of October 2025, the company is transitioning from R&D to commercial production, targeting explosive demand for optical interconnects in AI hyperscalers. Now, as far as the balance sheet, the company has a great balance sheet. Essentially, no significant long-term debt, but they continue to burn cash on R&D and scaling. A major $75 million equity investment closed on October 7th that now has their cash reserves to over $150 million, again, with no long-term debt. So from a balance sheet perspective, company has like a B+ balance sheet, I would say, A- balance sheet. Now, Poet remains unprofitable. Okay. Here's the deal. The company is going to start again really manufacturing in numbers next year. So they're essentially pre-revenue right now. The upcoming earnings in November, you're expecting like 270,000 in revenue. That number doesn't matter. The only thing that matters is what is the company expecting for 2026? Okay. Some estimates are all over the place. Estimates as low as 10 million in revenue next year, estimates as high as 800 million in revenue next year. I don't know where the number is going to be. It depends on a lot of different things. So we have upcoming catalyst. POET is positioned for momentum in late 2025 and 2026, driven by AI infrastructure demand and recent milestones. Key events include Q3 earnings expected around November 11th to 13th, focused on revenue progress from initial production orders and manufacturing ramp-up. Analysts eye any updates on hyperscaler partnerships. This company is a partnership away from with a hyperscaler to exploding. Okay. Here it says the $75 million investment deployment. It says here, follow-on orders and partnerships, building on a $500,000 initial production order announced September 2025 for optical engines, potential for larger AI/data center contracts in Q4 with revenue recognition expected by year-end. They are also fresh off winning the most innovative at ECOC 2025 in September and showcasing 1.6 T optical engines at CI 03 2025. Upcoming collaborations have also recently been announced with Silver Semiconductors on light sources that could yield Q4 announcements. They also have a partnership with Foxconn. Now, the stock is up about 8% today. As far as my position in this portfolio, we're sitting at about 500 shares with an average cost of $9.06 per share. Current market value, $4,125, and I'm down about 9%. This stock is up quite a bit in recent days, and my thought process was, if we get, a market that gets more turbulent and I'm able to buy cheaper and average down, that would be the idea, but you are bouncing back today. Now, trade negotiations, discussions with China are very fluid. If we get any more downside in this market, this is one that I will be targeting heavily. I also have a smaller position in this portfolio, worth about $1,651 and about 200 shares here. Average cost $8.96 per share. The market cap is $692 million. If we even get one hyperscaler partnership that really validates this technology in a data center type setting, I mean, the valuation on this could absolutely explode. You're talking 10x plus. You could see the company at a $6 billion market cap. That wouldn't be out of the realm of possibilities. The number 2 stock on this list is CCCX. Currently at a little bit over a $5 billion market cap. This is actually a SPAC. They're merging with Inflection within the next 3 to 5 months. Here's the deal with this one. It is a quantum company that's set to do about $50 million in revenue this year. Okay. As far as quantum companies are concerned, Inflection is cream of the crop. Okay. They work on their quantum computers, but they also sell quantum sensors and atomic clocks, different quantum-based products that are already bringing in some real revenue. Now, the management team here, highly skilled. They've only raised $270 million in capital since 2007. And I imagine they're still running at a loss, although we don't have all of those disclosures just yet. The fact they've only raised $270 million and they're bringing $50 million in revenue to markets this year, that is exceptional capital allocation and leadership. Okay, there's no other way to put it. Some companies are raising, $200 million a year and blowing through that. Okay, Inflection is cream of the crop in terms of leadership. Now, they are getting $580 million from net proceeds, and there's over $100 million dollars from long-term investing firms that are basically invested in Inflection to take part in the IPO process. Okay, so there's some big heavy hitters that are backing this one. Now, as I've talked about before on this channel, this is not the first time mentioning this company. The risk is, in my view, that quantum is in a bubble. Okay, if quantum is in a bubble, then this one is just a little bit less valued in a bubble. Okay, just like the internet bubble. Once it pops, like the ones that were, the high flyers are going to do the worst. but everyone is going to suck if that bubble pops. Now, I don't think necessarily quantum is in a bubble, right? But you don't know that until you know that. Now, apples to apples, this is the best looking apple of the bunch compared to someone like, or a company like Rigetti, which really doesn't bring in any revenue from products. Inflection, trading at a fraction of the valuation, is a steal. Now, Citron Research has come out and backed this company, saying if you believe in quantum, Inflection is the stock to own. Now, Citron has done a lot of work on Inflection, and they post quite a bit about it on their X account. One chart that keeps popping up is the comparison to Rigetti. Okay, Rigetti at $46.88 per share is a $15 billion market cap. Citron says that Inflection should at least have a similar valuation to Rigetti, which would put the stock at $58.82. The stock today is trading at $26.50 per share. So that would be about a double from here. The stock is up 18.3% today. So, yeah. Wall Street's starting to get on board with this one. But the upside could still be dramatic. Citron Research goes on to say that Inflection should have a premium to Rigetti. So if Rigetti is a $15 billion market cap, Inflection should at least be about $59 per share. But they say there should be a premium on top of that. So Inflection should be $60, $70, $80 if you, again, compare apples to apples with Rigetti, which would be substantial upside from current levels. Now, as far as this one, CCCX, I do have a larger position in this company because I was earlier to identifying this opportunity. I bought 500 shares at $16.42, currently up 61% or up about $5,000 on this position with a current market value of $13,200. Now, I have no options on this stock in this portfolio, but I do in the other portfolio. Now, in this portfolio, same deal. I have 500 shares, average cost $16.31, up 62%, and up about $5,000 on this position. This stock just ran so much, so fast that, you know, when you're seeing a 62% return in 7 days, the odds are the thing's gonna calm down a little bit. Now, I did go out and sell 5 of these CCCX $35 calls for November 21st. So basically, I'm agreeing to sell all 500 shares at $35 per share by November 21st if the stock is above $35 per share, which it very well could be. In this scenario, I would be forced to sell about, well, over 100% with over 100% return, plus the premium that was collected, which the premium that was collected was $320 per contract. So really, I'm agreeing to sell Inflection at about $38.20 per share by November 21st if the stock is above $35 per share. That looked like a win-win to me. I hope I do not have to sell the stock. That's the idea, is you just collect the premium because the premiums were really high. And, well, if you own a position in the company, I think now is not a bad time to sell some covered calls. Again, odds are that you do see the stock come down at some point over the next couple of months, since the stock has exploded recently. I mean, it's up 158% in the last 3 months. But all in all, I have about $26,000 in the stock, which the math is simple on this because I own 1,000 shares. So 1,000 times 26, $26,000. Now, last but not least is Resolve AI. Now, I'm going to assume most of you guys know about this company. If you don't, well, buckle up. Resolve AI is an agentic AI company for retail commerce. So basically what they're trying to do is create higher conversions online. So if 10 people go into a Nike store, 7 out of 10 people on average are going to buy something. If 10 people go to Nike's website with the intent of buying something, only about 3 people end up buying something. Resolve is trying to raise that number by developing and partnering with companies to optimize these AI agents. So you can ask retail-specific companies about sizing or coloring or material fabric or whatever it is for whatever product, what's popular right now, you get the idea. And that is helping to drive higher sales and higher conversions. The company says that if you partner with Resolve, you're going to have 25% higher conversions. You're going to have 10% higher online order values. Okay, that's what the company has been able to show so far. The company went public via a SPAC in August of 2024. They started selling their product commercially to customers at the start of this year. They set a target initially for 90 million in ARR. They came out mid-year and said they already hit 70 million in ARR, that they were well on pace to exceed that. Well, great. They raised guidance once. But they came out on October 1st and said, we have already achieved over 90 million in ARR, smashing their prior guidance, and said that they were well on track to meet or exceed 150 million in ARR by the end of this year. They also set a new ARR target of $500 million for next year. Analysts are projecting about $400 million to be realized, like in actual revenue, by the end of 2026. Just wait till you see what this company is trading at. It's ridiculous. This company has about a $1.7 billion market cap. So they're trading a little bit higher than 3 times next year's price to sales. For an AI company, that is crazy. With, again, hyper growth in a low competition market where the total addressable market is in the hundreds of billions of dollars range, right? Trillions of dollars potentially. There's little to no competition. In fact, Resolve AI's model beat ChatGPT 4 and Claude, the latest versions, in retail-specific metrics. So like cologne, for an example, it's going to have these plum notes and sandalwood and all of this. The problem with AI models is they are mathematical in nature. So they're going to say, when you type in, what's a good sandalwood cologne? They might start popping up like sandalwood or sandals or something else. That's called hallucinations. Well, Resolve's AI model in their white paper that was released on October 1st showed that Resolve AI's large language model performed better than these other leading models, which is kind of wild. So undervaluation is crazy with this company, and I think it really has to do with not a lot of people know about this company because, the company's not new. It was founded in 2016. They took 9 years developing the product and then finally came to market with sales this year. So it's very, new company as far as revenue generation. What I do like about this company as well, 38% of shares are owned by insiders in the company, so they are very much exposed to how the company does financially on a personal level. And Citadel bought $100 million worth of shares. It was about 5% of the company at $6.67 per share. So if Citadel was like, take my money at $6.67 per share, they probably have a pretty good idea of what this company is valued at and going to do down the line. Okay. Now they have a lot of crypto endeavors as well. They want to make it instantaneous to use crypto at brick and mortar locations. Like you can go to McDonald's or Starbucks and pay for your food or coffee and instantly settle that transaction with crypto, right? You go there, you have Bitcoin in your wallet, you use your card, the Bitcoin settles instantly for the merchant and for you, okay? That's the idea. That's what they're trying to do. They have a partnership with Tether. This company also has a partnership with Microsoft and Google. Okay, so some heavy hitter partnerships here. Projecting profitability by late 2026, early 2027. And the founder is still with the company, Dan Wagner. Now, the stock hit a high of about $8.50. There was a short report that came out on the company, which I talked about this many times. The company was vulnerable to a short report. They are a UK-based company, so they only report 2 times a year. Okay, they are looking to change that in 2026, but the company hadn't reported in a long time. They do put out a lot of press releases, and it's a brand new revenue company. Dan Wagner also has a business that failed in 2016. Okay, so people like to just throw this black cloud over Resolve when there's really no comparison. Okay, so once that short report came out, the stock got dinged. After earnings, the stock recovered. And, well, now we have China, U.S. debacles happening. Okay, and the core problem with this company and why it's so undervalued relative to other AI companies is simply there's not a lot of coverage of the stock. From an institutional perspective, a lot of retail investors do not know about this company. That is where the opportunity comes in. Not every day do you get to buy a company that's growing at hundreds of percents for many years to come. Like, this company is going to grow 100% plus next year. Like, what, 250% next year? Probably 200% the year after that. Probably hundreds so percent after that. Hundreds of percents for multiple years. Not too often do you get to buy a stock like that at 3 times price to sales. So Resolve AI is by far the cheapest company here, and I think has the best risk to reward because of how cheap it is. Now, as far as my position, I have 13,000 shares in this portfolio. By far the biggest position, single stock position of my portfolios. Current market value, $70,000, currently up about $30,000 or up 74% in this portfolio. In this portfolio here, I have 14,000 shares, current market value $75,000, up 81.5%, up $34,000. Average cost $2.96, and I do have these Resolve 250 calls, 15 of them for 2026. Okay, so we are heavily exposed in this one, and the current value, or I don't know why the calculator freezes up on this new computer like that. But we have 30,800 shares times the current market price of $5.39 means I have $166,000 in exposure in this company. This is going to be, I believe, $1 million position for me over the next 12 months. The stock should be anywhere between a $5 to $10 billion market cap today. With, by the end of 2026, the stock should be even higher than that, which puts the stock at like $30 a share on the high end, $15 per share on the low end next year. And by the end of 2026, the stock could be well above $50, between $50 and $100 per share. That's the idea here. Once people really start to catch on to what Resolve is doing, all it's really going to take at this point is maybe NVIDIA taking a stake, more coverage on the stock by analysts in Wall Street. Maybe it's, a big new partnership, whatever it is. But you're one catalyst away from this stock going absolutely parabolic. So yeah, I like these stocks. Let me know your thoughts on all of this down below in the comment section. What are your favorite AI stocks right now in this market? I would love to hear that. Come check out the link down below in the description of this video for the trading community as well if you have not done so already. That is really just the place to be over the next 10 years as we conquer this AI market and get rich in the process. So that link is down below if you guys want to take advantage of it. But that is it. Have a great rest of your day, and I will see you in the next one.